Is gold still worth investing in? For centuries, it's been the cornerstone of wealth, but in today's fast-paced digital world, does it still hold its shine? In this video, we're diving deep into why gold has stood the test of time and why it could play a key role in your investment portfolio right now. We'll explore the economic forces behind gold's price, how it compares to stocks and crypto, and how you can actually start investing in it today. Make sure to watch to the end for unique insights that could help shape your strategy, especially in an unpredictable market. If you're serious about growing your portfolio, hit that subscribe button for more weekly investing tips and tricks right here on Value the Markets. Gold has represented wealth and power across every major civilization, from ancient Egypt to modern central banks. What makes it special is that it isn't tied to any single government or economy. It's physical, scarce, and universally valued. This gives gold a kind of trust no fiat currency or digital asset can match. It's the asset of last resort, held not just by collectors, but by central banks around the world. In fact, global gold reserves remain a key indicator of national financial strength, and even central banks know this. As of 2025, central banks hold over 35,000 tons of gold globally. That's not just tradition, it's strategy. Gold has one standout superpower: it protects your money when inflation eats away at everything else. When the cost of living rises, the value of cash drops. But historically, gold has held or gained value during these periods, like in the 1970s, the 2008 crisis, and again in 2022-2024. During these periods, investors turned to gold not for growth, but for protection. It became the financial safe zone when other markets felt too risky. Inflation isn't just something that happens once in a generation. Even 2-3% annual inflation compounds over time, and gold's role is to act as insurance against that erosion of value. In 2025, gold broke records, reaching over $3,500 an ounce. Why? Rising interest rates, war fears, and growing distrust in fiat currencies. What's more interesting is who was buying. Central banks in countries like China and Turkey increased their gold holdings. Retail investors also rushed in, seeking security. ETFs saw record inflows. Major institutional investors shifted a portion of their portfolios into precious metals. And younger investors, who once only looked at crypto, started paying attention to gold for the first time. All of this points to one thing: gold isn't going out of style, it's evolving with the times. How does gold stack up against other assets like stocks and crypto? Stocks can soar, but they can also crash. Crypto, even more extreme. Gold, on the other hand, tends to move more slowly. It doesn't generate income, but some investors use it as a store of value, especially during market turbulence. In times of crisis, gold often rises while equities fall. When gold is part of a balanced portfolio, it can help reduce volatility over time. In some downturns, gold has held its value or even gained when other assets declined. And if you want to learn more about other stable investments, just ask us. Drop your investing questions in the comments, and we'll cover them in future videos right here on Value the Markets. You don't need a vault to own gold today. Today's investors have multiple options. You can buy physical gold, like bars and coins. This is the most tangible method, but it comes with storage and insurance costs. Next, digital options like ETFs or mutual funds that track the price of gold indirectly. These offer liquidity and convenience. And for the adventurous, mining stocks or gold-focused mutual funds. These can outperform the metal itself during bull runs, but they carry business risks. Whichever route you choose, the goal is the same: to manage risk and give peace of mind. So when should you buy gold? It shines brightest when inflation is heating up, interest rates are uncertain, geopolitical risks are rising. But here's the secret: you don't wait for a crisis. You build your gold exposure before you need it. Most advisors suggest 5 to 10% of your portfolio in gold. Not to chase gains, but to protect everything else. So why invest in gold? It won't double your money overnight, but that's exactly why it matters. Gold is reliable and still has a place in the modern investing landscape. It won't make you rich overnight, but it can help protect your wealth through market storms. And in an age of headlines, hype, and high-risk investing, gold is your anchor. If you're serious about long-term wealth and resilience, it may be time to give gold a closer look. If you found this video useful, subscribe for more weekly investing insights from Value the Markets. Drop a comment if you have a question you'd like us to answer in the next video.